Call 29th of September 2025. I'm Mark Gardner. Stocks broke a 3-day losing streak as precious metals continued to run on Friday. Look, we still finished. I think it'd be the first down week in a very long time. I think it's probably a 7-week run for the Russell. I believe it's more like a 3-week run for the Nasdaq or the S&P. They did recover though. Obviously, the Dow up 0.65, 0.59, 0.4, and then 0.93 for the Russell, turning those technicals around a little bit. But we were off in Asia. Slight gain here for the Aussie market. There were concerns around the PCE number, and that basically came in line. So the PCE index rose 0.2, and yeah, and we essentially, which keeps it in check overall. Fed Reserve Vice Chair Michelle Bowman reiterated her call for rate cuts, which was very much at the opposite end of the scale to Powell giving caution at the end of at the start of the week. Now, but yeah, look, that GDP number really does put things, any further rate cuts in question, that's for sure. At 3.8, one of the largest revisions. But it will be all eyes on payrolls this Friday now. Payrolls will be a significantly important number. And you would expect, because it's a fair bit more of a leading indicator than the rest of these numbers. A lot of them are, very backward looking. So yeah, they probably won't take into account too many numbers from that GDP overall. But I think we're looking at 51,000 for the employment change on Friday, and then 4.3 for the unemployment rate as well. So anything weaker than that, when we're obviously going to start to see some downward movement. So Oracle taking a bit of a breather. Costco as well, starting to technically break down despite beating beating the market's expectations on earnings results on Thursday, which was our Friday morning. Pretty surprised there. It did beat on many, but look, it is usually priced to perfection. And down 2.9 probably now signifies a fairly significant technical breakdown for that stock. I would probably not be touching that with a 10-foot pole for a little bit. We were. It's one of our high conviction long term. We did have an alpha recommendation on that, which we stopped out on Friday. So we'd expect it. Now these lows haven't these 12-month lows haven't really held, or 9-month lows haven't really held, that it'll probably continue to drift a little bit lower. What didn't help as well was Trump coming out with announcements on really weirdly specific stuff. 100% levy on branded pharmaceutical imports, but only if you didn't have a manufacturing facility in the States, or you weren't planning to have a manufacturing facility in the States. Additional tariffs on trucks, household fittings, kitchen fittings, furniture. And I mean, look, as you can see here, there wasn't much downside in that part there. Australian companies that sort of were hit a little bit on Friday, potentially on the back of concerns over that with CSL and the likes of Telix. Telix actually benefits. It doesn't. It's got 31 manufacturing facilities in the US, so they're all fine. CSL has a bunch of manufacturing facilities in the States as well, so they're fine. So I'm not entirely sure, what will play out here, but the Australian market at the moment is just so negative on healthcare. So just assume the worst. And then the analyst will just retrofit some sort of argument in to give you a reason to sell, I suppose. This will play out in the next 12 months, and this will be one of the better opportunities to buy CSL, Telix, and the like. But probably just not yet. When the crowd is just yelling sell, it's best not to fight it until you start to get a bit of a rebound. There wasn't much movement in most of these bigger names on Friday, except for Tesla. Tesla would be very close to record highs here at the moment. I believe there's been some announcements around Optimus 3, and I think Elon took, well, it depends. It's on Twitter, so just be mindful that, there's a lot of bloody deep fakes and things on Twitter these days, but I'm fairly sure that they had an Optimus in the White House as well. And there's been a fair bit of talk around those those robots. So that will probably continue to rally, I would say. It's one of our it's one of my favorites. Everyone's a bit down on Elon, but you are buying the man, but and despite his his social media presence, the guy still delivers for the shareholders. So very quiet in terms of earnings results this week. We've got an RBA rate decision tomorrow. We've got a raft of Fed speakers a week. Manufacturing PMI Wednesday. Those employment numbers we talked about there. These two companies are pretty big, Nike obviously, and Constellation Brands, and Tesco is fairly massive on Friday, but they're not. None of them are going to be market moving. And here we have, the big run here in silver and platinum. Platinum up 13, or nearly 13 for the week. Silver up 8.6. We just breezed like a hot knife through butter through these through these. I think silver started the week at 43. It just went 44, 5, 6, and finished at the highs at 6, around that 650 mark. Platinum as well. There's a little bit of geopolitical issues around that as well. Just because in the last 36 hours, Russia's launched one of its largest aerial assaults on the Ukraine, deploying nearly 600 drones, 50-odd missiles, struck multiple cities, including Kiev, killed 4 people and injuring 70. Russia and South Africa really are the major producers of platinum. So any sanctions there, and we're going to see, we're going to see some movements higher there. Just going to give you some context. Gold silver ratio 50-year average is around about 63. Gold at current prices would put silver at 63, about 37% to go. There's about 8% to go on the all-time high, or maybe 10, or around about 10. And then here we are here, South Africa and Russia, obviously the massive part. But if there's any movements against BRICS, particularly, we're going to see. But platinum to gold ratio, the 50-year average is actually 1-to-1. Now, I'm not entirely sure what changed in the last 25 years. However, that would put, obviously, you got platinum at 1,500, 1,600 here. Even just to get to the all-time high is about 45% to go. To get to the 25-year average, it's at 2,900 is 86% to go. But if you want to look at the 50-year average, that's 3,800. So we're talking over 100% to rally. That's pretty extraordinary overall. And look, I remember a time where platinum was significantly higher than gold. I'm showing my age here, but this is a weekly chart going back to 2018. And the silver chart obviously goes back to 2008, and just to show you that record high there. So still plenty to move there. The gold miners versus the gold price are probably the best way to go. The EPS will extrapolate out into higher returns. And we've seen that in gold, the GDX ETF versus the gold price, which is gold price up about, I think the gold price up about around about 10 for the last month or something like that, or 10 or 12, whereas the gold miners is up around about 20. So, that move realistically is, you're probably better off being in the physical, and realistically you can only be in the physical and platinum. That'll be the ETP MPT ETF, which is very thin, but there is market makers there. It's really your only choice here, probably in Australia on the ASX to get long platinum, unless you've got access to other futures and CFDs and things. But silver, you've got Andean, you've got Polymetals, and you obviously got ETP MAG as well. But there'll be a time for the silver. I think the silver miners will play catch up, but I think the pure play, so you don't have any mining risk, is probably still the way to go. And just maybe just the flat out silver price. With platinum, you haven't really got too much choice. Yeah, and we've got our webinar coming up in just over a week, Tuesday the 7th of October. It'll be at midday. Get your registrations in, and we'll be discussing, becoming increasingly important now, particularly with, Russia launching those attacks. So pretty good results from the stocks that we recommended at the last webinar. So, do yourself a favor and get involved in that. For the Australian market today, I would expect obviously precious metals to grind higher, but there is there are a few minor concerns around, obviously around Russia, etc., and Trump bringing in US troops to tame down cities and clean up crime and things like that, and the government shutdown that's looming, which is everyone just basically said now it's going to happen. So I wouldn't imagine it's going to be great for the US dollar. They're even questioning whether if they're not paying, can there be payrolls, which would be a very interesting occurrence. So I would be erring on the side of risk off potentially, except if you're playing defense stocks and precious metals. And then I would be, they're two trades for me at the moment that have massive tailwinds. They work in geopolitical times of stress. They work if there's going to be a government shutdown, and they've already got technical momentum. They're pretty safe plays. Whereas, you've got officially on the average of most of the major valuation metrics that legendary investors use, like Shiller Cape ratio, trailing PE, forward PE, and market cap to GDP. We're officially trading at the most expensive level in history at the moment. So the concentration of the major, the top 10% of stocks is now like 75% of the market. That could actually mean that this thing being overvalued, you can potentially push a little bit high because these companies are more financially stable. But it'll be something you can only really we'll really only know in hindsight, I suppose. But they are sort of scary stats. But I hope everyone has a great day and you've had a great weekend. And we will speak again tomorrow.